Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 5th, 2022. Hope you're all doing well. In today's segment, we'll take a look at high volatility options trading strategy. It's a selling strangles. I love this strategy because it's an income strategy. So in this strangle, you will end up selling a out of money put option way below the current stock price, and you will end up selling a call option way above the current stock price, and that way you receive premium for selling the put option as well as selling the call option. And it's an income strategy. The money that you receive is the maximum profit that you can make. So with that, let's jump in and look at do's and don'ts of this strategy and how do I execute this strategy. So with that, let's jump in. Alright, so what is this high volatility strategy? What is selling strangle? We'll go into the details here. So in this, like we talked about, we'll be selling a strangle, which means we'll be selling a call option as well as put option. I like to keep it very safe, so I typically sell it for the big, huge ETFs like QQQ, SMH, and XPI, SPY, and even I would do it on IWM also, which is another big ETF. And sometimes I also do it on big cap stocks like Apple, Microsoft, Nvidia. When I see huge volatility spike, I do sell them, but I pick stock very carefully, profitable companies, not money losing companies. And finally, I make sure delta is about 15. I will talk about delta in a bit so you get the idea. And finally, let's conclude and just talk about few do's and don'ts and what to look out for. So with that, let's jump in. Look, you might wonder, what is this selling a strangle if you've not done it already? So think about this way. So suppose QQQ is at about $310 right now, and volatility is spiking very high, and volatility or IV percentile, as we call, is above say 50 or so. So in an ETF like QQQ, if the volatility or IV percentile is above 50, that means it's really volatile. So at that time, I will be executing this strategy. What I would do is I would sell a put option way below the current stock price. Look, current stock price is at 310. I'm selling a put option way below current stock price at 287. We call it out of the money put. And I'm also selling a call option way above the current stock price at 328. So this is a selling call option out of the money call option. So in this strategy, my profit zone, maximum profit zone is right here. This is my maximum profit zone. If the stock stays within this range, I get to keep entire money that I received for selling this put option as well as selling call option. And if the ETF goes above 328, as you can see here, or below 287, then I tend to incur losses. So that's where you got to watch out for. That's one of the reason I look at the ETFs here, like QQQ, IWM, SPY, pretty safe. It's not like a single stock where you will lose your shirt. So that's where you got to pick these ETFs and go from there. So with that, what we'll do now is we'll jump into Thinkorswim platform from TD Ameritrade and execute few strangles, so that way we can feel comfortable and we can execute this tomorrow, as volatility is still high at this time. So with that, let me take you to Thinkorswim platform from TD Ameritrade. What I've done, just to look at the profitability, I went into Thinkorswim platform. Right now I'm in May 2nd, 2022. I just picked a date. There is nothing about picking a date. I just wanted a past date, so I picked May 2nd. So what I will do now is I'll look at QQQ here. I got QQQ right here. It's one of my favorite ETF, and I will go into the chart here. Look, I'm in a chart right now. Look at the IV percentile on this date. IV percentile is relatively high at 70, and look, stock is slightly higher today. Look, it's up 1 cent, as you can see here, and it's fluctuating between up and down, as you can see here. So what I would do is really I would execute this strategy here. Typically, to execute this strategy, you got to know the top and bottom. Look, you got to know the resistance level and support level. If you look here, there's a nice resistance level around 408, as you can see here. And as you look at the bottom here, maybe right here around 266 or so, there is a nice support level around this place here. So you got to understand your top and bottom, or your resistance level and support level. So you don't need to worry too much about it. I'll talk through this in a little more detail. And then what we'll do is we'll go into option chain. Right here I am in QQQ. Typically, to execute this strategy, you got to go into around 46 days out. That's the sweet spot here. Around 45 days is sweet spot. I'm sticking to 46 days because it looks like there is an option chain right here. So look, right now stock price is about 313, as you can see here. And 52-week high is 408, as you can see here. So I would go here and look at the current price, which is 313. Let's go around 313 and look, 313. Let's go here. So 312 is the closest one, or we can pick maybe 314 is the closest one. Let's make it a round figure. Let's make it 315. So I would even make 314 here, no big deal. So let's sell a strangle here. So you can just go here and sell a strangle right here. So I typically like to sell the strangle at a delta 15 on both call side as well as put side. So as you look through here, delta call side, keep going down here. Look, we got delta 15 right here. Around 350 is delta 15. If I sell at 350, I can get to make around $2.32. That's good enough. Let me go sell a call option at 350. Let's go here, call option 350. Right there, 350. So I'm selling the call option. As you look through here, delta 15, as you see here, and that tells you probability of this QQQ reaching this price, which is 350, is about 15%. That's what it's telling you. So that's why, if it is just 15% probability, I'm pretty comfortable here. That's why I'm selling this, put a call option at this price here. So it's really, telling you what could be the probability. And then on the put side, we'll do the same thing, and we'll go all the way down here. Look at delta 50. Keep going down here. Look, delta 15 right here, 16. I would say maybe 13 is good enough. There is no 15 here. Let's go 13, 265. So I'll go here, sell put option for 3. Let's see here at 13 here at 265. So go here, 265. There we go. So look, what I'm doing here is, I'm really strangling this here. I'm saying, hey, stock is ETF is trading at 313. I'm selling a call option way above the current price at 350. I'm selling a put option way below the current stock price at 265. For doing that, I'm collecting a nice $6 premium here. I like nice juicy premium. I'm basically going ahead and confirming this. There we go, done. It's already, we got it. So let's do one thing. Let's do a few more. Let's look at SPY. SPY is also one of my favorite ETF. The reason I do it on ETF is there is no single stock risk, and ETFs are pretty safe. It doesn't go, skyrocket up or down. That's one of the reasons we choose these stable ETFs. And if you look to the chart here, SPY, look at that IV percentile here, 85. That tells you it's very, very, very volatile. And look, the price is slightly higher today, 0.22. This is on May, let's see here, May 2nd or so here. So, it's slightly going higher. I like it. And if you look through support resistance here, look, all the way high is 479, all the way low somewhere down here around 350. You got to understand the range here, so that way you know how to sell. But either way, we'll look at the delta and depend on the delta. All right, now let's go here and I would do same thing 46 days out. Stock is ETF is trading, SPY is trading at 412. I go right around 412. Very easy to execute. That's one of the reason I love it. Simple to execute. So 412 we got it right here. I would sell a Strangle like we talked about earlier. Sell Strangle right. Oops, not straddle. Let's make it a Strangle. All right, we are selling a Strangle here. What I would do, same thing like before. Look at delta 15 on the call side, go all the way down here, delta 15 right here. So 447 is delta 15 on the call side. We'll do 447 all the way down here, 447. There you go. Good. So on the put side, we'll do the same thing. We'll go all the way down and look for delta 15 here. All right, we came too much. Okay, delta 14 is good enough for me. 360. Let's go 360 here. There you go. So we are getting a juicy credit here. Look, $6.73 credit. I love it. Go confirm and send here. As you see here, look, we are making around $670 here, and maximum loss is infinite. But hey, it's not always infinite. SPY won't go bankrupt. Don't worry too much. And buying power effect is around $9,000, as you can see here. You got to have nice buying power. You don't have to have money, but if you have some borrowing power, that's what's required. We'll confirm and send this one right here. All right, so we confirmed and sent this here. Let's do one more or two more. One on IWM right now, which is one of my favorite ETF, which is Russell 2000. And as you see here, Russell 2000 here, and look at the volatility here, 63 IV percentile, nice and juicy here. And we'll execute the same strategy here. And go to IWM, 46 days out. Current price is 186. Let's go around 186, as you can see here, right here. And we'll execute. Very simple to execute. I love the simplicity here. And go Strangle right here. Delta 15 on the call side. So keep coming down here. And Delta 15 right here. 14 is good enough. And that's 207. So I would just pick 207 here. And go from there, 207. There, and on the put side, do the same thing, go all the way down here and look at delta 15. All right, we got our delta 15 right here, and that's 162. I would sell at 162 here. There we go. We are getting a nice $3.51 and confirm and send. And look, we got break-even price is 358 on the lower side and 210 on the higher side. I will confirm and send this one also. Done. We'll do one more and go from there. We'll do SMH, which is one of my favorite ETF to do. This one here, SMH is semiconductor ETF, which has got NVIDIA, AMD, and so on and so forth. Look, IV percentile is 87, nice and juicy here. I love it. That's one of the reasons I'm doing this. And let's go here and go to 46 days out, as you can see here, and current price is around 233. I will go around 233 here, right here, 230. 235 is close enough for me. I will just go and sell a Strangle, as you can see here. All right, so we'll follow the same methodology, delta 15 on the top. So that puts me at 270. So I will do 270 on the top here, all the way down to 70. There you go. On the put side, I will do same thing, go delta 15 here. And look, we got delta 15 right here at 195. I'll pick 195 right on the right here. All right, so we are collecting nice $6 here. I like it. Nice premium here. And confirm and send here. Buying power effect is not too much, just 3,400. Done. So we did Strangles. That's a good one here. You can do this when the volatility is high. That's one of the reasons I do it. I do it whenever stock market jumps up too much or comes down too much and volatility is generally higher than 50 IV percentile is more than 50%, that's when I execute this strategy very consistently to generate some good income. All right, now what we'll do is we'll fast forward and we'll go to last Friday here. That's June 3rd or so. Let's see. We sold on May 2nd. Now we are trying to see how much profit or loss we made on June 3rd. Let's go here. All right, so let's just let it buffer. It takes a minute or so to buffer. Done. Let's still pre-buffering. Let's wait a couple more minutes here. All right, so we are done here. As you can see here, we sold a couple things here. We sold IWM here, which is Russell 2000. Looks like we made nice money here, $324. Next is QQQ. We made nice $572. And we made SMH around $528 in SMH. SPY we made around $638. Overall, we made $2,066. Great strategy. What I would do now is I would take some profit here and sell all these things and book the profit. So I would just go here and buy the Strangle at 27 cents. Look, we sold it for a much higher price. Just close it out here and take some profit. Done. And we got a couple more to go here. And let's go and sell others also here, so that way we can book the profit here. QQQ, close the Strangle, and we are buying it at $2.94. I could keep it for some more days and milk some more juice out of this, but let me close it anyways. Made a good profit. Don't need to be greedy here. And we got one more here, SMH. I can do same thing here. Done. And let's look at one more SPY, take the profit here and go from there. So you could do this, you don't need to wait till the expiration. When you made a good profit, take the profit and execute strategy again on some more stocks here. I think we got here SPY, which is waiting. It might take a couple more minutes, and I think it's a good strategy. So with that, let's go back here and sum up. To sum it up in a conclusion, I love selling Strangle, especially when the volatility is high. My favorite way is to sell Strangle on the big ETFs like SPY, QQQ, IWM and SMH, like just you have seen just now. And it's an income strategy. Maximum profit is equal to premium that you received. And do it when volatility is very high, when stock market is going haywire, there is all uncertainty, Russia, Ukraine, high interest rate, inflation, all news is battered and the market does not know. That's when you sell these Strangles on these big ETFs and make some money. And there is no single stock risk, there is no earning risk, there is no FDA approvals, no takeovers, there is no acquisition. So that way you're safe with these big ETFs. And don't be greedy. Sell at Delta 15 call and Delta 15 put options, so that way the probability of the price hitting your target price is around 15%, which is acceptable risk. If you're a little more risk averse, I would say try with Delta 10, which is even further out of money. You will be a little more safe, even though premium that you receive is also a little bit lower. And make sure time to expiration is around 45 days. We sold at 46 days, which is okay. It could go up to 50 days, but don't go above 50 days. As the volatility falls and time passes, the probability, your profitability increases. That's one of the reasons I love this strategy. It's an income strategy. So with that, thank you very much. Happy investing and trading. Please subscribe.